Hey traders, Raghee here. Happy Wednesday, everybody. Welcome to Charts and Coffee for Wednesday the 27th. Great to see everybody. Good morning, good morning. Good to see everyone. Absolutely. Hey there, Michael. Yep, caffeinate and dominate. I love it. Good morning, good morning. All right. So let's actually jump into the questions. I can see a lot are here already. So let's jump into your questions. First up is Tim. Which has more importance? Which do I use for trade entry first? Propulsion dots or the wave? Okay, so great question. What I use first, Tim, is actually which one is actually available. In other words, which one is visible. So in terms of which is first, I mean, a lot of that has to do with proximity. So if the dots are visible and I have a sufficient number of dots, then I'll consider the propulsion. If not, it's just nothing until I hit the wave. Maybe there's a Darvis, maybe there's a volume level, but if propulsion is there, I'll usually consider it. If it's not there, there's nothing to consider. So it really has to do with whether propulsion is visible, whether I have sufficient number of dots. And one thing I'll say is I will usually, unless we're in a parabolic market and I'm expecting and dealing with shallower pullbacks, I'll usually forego the 13 or the yellow dots, and I'll go with the 21, which are the green dots. So that's how I'll consider proximity and which one of those two tools of mine that I'll use. So thanks for the question. All right. Were any alerts for the ETF class sent out? Yeah, Michael, I hope you're doing better. So we sent out a video to give you an idea of the pattern and what we look at in CHOP. And then I'm anticipating probably a watch list at very least in our ETF class, which, by the way, you can still join. Those of you out there that are wondering, can we join you for live trading? Of course, over at simplertrading.com/extract. So you didn't miss anything. We still have the better part of, 2 weeks, nearly 2 weeks together. So I'm anticipating a watch list most likely. And if price action gives us some proximity to a setup, yeah, I'll get that alert out. Okay. So again, hope you're feeling better. Next up is, hey there, Kevin. Does the JT multi matter if you're playing an oversold, overbought type environment? Of course, because I wouldn't know that let me get my drawing tool out here. There we go. I wouldn't even know. I wouldn't have a consistent way, an objective way of confirming that we're in CHOP if it wasn't for the multi. So yeah, of course it will always matter. Now, it's no different than if we're in a trend. It's always going to matter. So once I have the read on the market, well, then the heavy lifting is going to happen on the price chart. The multi is not giving me a setup. The multi is not giving me a trigger specifically. It's just letting me know the environment we're in. So structure precedes strategy. And so, yeah, it will always matter because I wouldn't know what environment we're in really with that objective, color-coded simplicity without it. So thanks for the question. All right, next up is good morning. Good to see everybody. My thoughts on PANW for a dip buy in the zone. All right, let's pull up PANW. All right. Now, yeah, somebody asked me about PANW either in the options room or the futures room. I can't recall. But Furman, yes, I do like the dip buy. Oh, absolutely. And again, what I would always want to know, especially when PANW was moving opposite the broader average, opposite sort of the sectors and the other sympathetic stocks names that it trades with, why was it disconnected? Whenever you see a disconnection where one stock is doing something fairly different than the rest of the group, I would suggest let that be a catalyst for a little bit more research, a little investigation, right? But I found nothing. Now, that was yesterday. Today, maybe we've got something after the fact giving us some clarity on that. But structurally, we're good. And we were able to maintain support within the wave. So I'm fine with a pullback buy. The only other thing that I would say is the move in PANW from top to bottom in terms of the range that it covered. And let me see if I have that data here. Let me check something. Because whenever we have what seems to be visually a large move, I have PANW? I guess I don't. Okay. So that's a bummer. Okay. So what I'll look at is that move larger than the historical volatility? I'd say it's probably pretty close. So if you want to wait for a minor lower inside day to day, you certainly could. But because the sell-off was contained, supported by the wave, I'm fine with that. I'm fine with looking for a long position. Call vertical, long calls, absolutely. Andreas asked, can I go over ZB lower lows, or was this the low? All right, let's take a look. Now I'm short ZB. I'm short ZB, and we took profit on that, and very likely, if you're in the mastery of the live trading, heads up, because I'm probably going to look to do it again. I will very likely almost nearly refire the previous trade. So the first question is lower lows. I don't know. I really don't. Nobody does, right? Of course. So here is support. That's what we do know. We do know that level held now twice. We also know that this level here is probably resistance. Whether it will hold, I don't know. Okay. So will we see lower lows? The bottom line is we don't need to. We don't need to see lower lows to take a profit. Is the low in? Again, nobody knows. But again, it doesn't matter. Because again, if we can exhaust here at resistance and just travel to support, we're right as rain. So the less that I have to guess at what's going to happen, the more, better said, the more I can simply rely on what I want to do at certain prices and not what I think is going to happen and prognosticating and crystal ball, future, fortune telling. The more I can veer away from that, the better I'm going to be. The more I can focus on, well, if prices get to this area, what do I want to do? At 160, I want to look for long puts, likely on TLT, and short ZB again. Now, I might look for a pattern again, but nonetheless, we're in the zone. So everything else really shouldn't matter in terms of whether we'll see lower lows or whether or not the lows are in. This is what I do know. We're still in a downtrend. And that's enough for me. Structure is still intact, and we can work with that, right? So thanks for the question. Would I please look at KMB? Of course. All right, so take a look at Kimberly-Clark. Kimberly-Clark, I know it looks like it's a downtrend, but it's not. Wow. Lots of bearish momentum, so say the 8, 13, 21 EMAs, but we're still in chop, and we have been since late June. So the only thing I'll say here, if this is chop, is we are south of the 200. Now, being south of the 200 carries with it sort of a resistance zone in this area. I'd say between 136 and all that's selling pressure. So being south of the 200 carries with it a more bearish bias. It's south of the equator to the bearish hemisphere. That 200 is a line in the sand of psychology that really has been something that has been affecting the markets since, the three plus decades I've been playing. it's an important level. So being south of that is pretty darn important. And even though I don't have a downtrend, the closer I get to that level, there is a potential fade short waiting there. So Raman, yeah, I would look for the closer we get to it. Right now we're at the resistance of the point of control. That's basically based on the look back. That's the most volume that's occurred since mid-June, or sorry, mid-May. Mid-May. So between that point of control and the 200, you probably have a pretty good shot at finding an overbought resistance area to fade short or get long puts in Kimberly Clark. And then, I would definitely make sure you're stepping out to the sector level to take a look at what's happening in the bigger picture where Kimberly Clark is involved. All right, next up, Jimmy asks, hey there, Jimmy, VZ, sure. Nice downtrend, red over red, good bearish structure, lots of red grab candles, and yeah, bounces into the wave are totally shortable. The only thing I'm going to mention, and this is not specific to VZ, but this is to every symbol that we're talking about. Be aware of where earnings are. We are back in earnings season. And if I am within 14 days to earnings, I'm usually going to say thanks, but no thanks. And I'll pass and look for an opportunity after earnings. And here we're after earnings. So if we bounce up into the wave again, I'm fine with that short. VZ is in the dumpster fire of the IYZ. And as long as that's weak, what's not to like about potential shorts in that telecommunication sector? All right, next up, do I have a target for natural gas? My favorite target, more, but yes. So we're back in UNG. I think it's interesting where, and thank you for asking for natural gas, because this thing has been the gift that keeps on giving. There's no doubt about that. So where have we seen resistance before? And the easiest way that I know to recognize these things are just lean on the Darvis. All these Darvis levels here. Well, what's in play? These could be support, sure. And these are resistance. So I'll look to previous highs. I'll look to these resistance levels and just remember that an initial profit target, the first one, should not require the market to do something new high, new low. Don't expect the market to do anything other than what it's been capable of doing before, which is why previous highs and Darvis are so powerful, because we're not expecting for the first target. Now, second, third target, go for it. That's where you want to go for the moon. That's where you're expecting higher highs. That's where, for example, in KRE, that second target that I want to place, I want to be very ambitious with that second target. I don't want to be so ambitious with the first. So that's what I'll look at for those first targets. I'll just take a look at the previous resistance on NG. And by the way, that's going to affect the way in which I will manage the long calls that we have in UNG. So thanks for the question. All right. So next up, hey there, Christian. How do I deal with what I think the market will do? For example, you have many longs and think the market may correct. If you have many longs and you think the market will correct, is it better just to leave the setup work? I think you answered your own question there, Christian. Stop losses are part of our trade the way a seatbelt is a part of our car. I don't expect to get in an accident, but I put my seatbelt on, right? When I rode my motorcycle, I don't expect to get in an accident, but I wear gloves and a full face helmet. So stop losses are the same thing. I don't know what's going to happen. So how do I deal with what I think the market may do? Well, there's two sides of that, right? What will the market do in my favor? That's what targets are for. What will the market do? Not in my favor. That's what stop losses are for. That's how I deal with it, with the trading plan and my orders or alerts, which is what I prefer. So if I have longs and I think the market will correct, remember, it's the corrections that get me long. Most of what you're explaining are the challenges of a momentum trader. Momentum traders like to see higher highs. They buy into that. They are the most susceptible to pullbacks. They're also going to benefit from markets that go parabolic in a way that exhaustion traders like myself cannot. So there's a pro and con to each. I just think the cons to momentum trading are far higher than the cons to exhaustion trading. And I'm wired like an exhaustion trader. So most of that are the problems of a momentum trader because an exhaustion trader is already in. The correction's likely going to be another opportunity. And because exhaustion traders are likely in some bit of unrealized profit or realized profit when the correction happens, then we either have a trailing stop or a break-even stop helping us out. So that's how I deal with it. And I think you're right. Don't overthink it. Don't overthink it. Let structure dictate strategy and then follow your strategy. You're absolutely right. I think you know that, right? Because I think you kind of answered very nicely your question in that in that question you had for me. I think you got it. All right. So next up, do I have thoughts on? Yeah, somebody asked me about BITO in the free video. There's not enough for me to work with. So my answer in I think it was yesterday's free video. Somebody asked me, am I interested in BITO? I am, but I want it to mature a little bit. We have so little to work with. I'm going to watch for the volume, see what the average, I want at least 21 bars, right? So let's get 21 bars, about a month or so of data. We'll see what the average volume is like. We'll see what participation is like. Where do we end up with a point of control? So right now, this is really a volume conversation. It's not really a price conversation because we're still sort of in the midst of price discovery. So I'll make this a volume analysis mostly. And I do the same thing with any new IPO, DPO. I do this with any new symbol. It could be the same. It's the same thing when the micro crude oil futures were trading. I'll let it sort of develop and see what the volume is like. So the other way that I answer the question is just like I would use the ES futures to understand what's going on with SPY, I'll take a look at BTC USD. I'll take a look at BTC USD to understand what's going on with BITO. And as BITO trades, I want to see whether or not it's, how well is it in sync, right? Same thing went with the Bitcoin futures. How well were Bitcoin futures in sync with what was happening in Bitcoin? And one would think, hey, Rog, it should pretty much be in lockstep. We want to confirm these things. I never want to assume. And while we're on the topic of Bitcoin, it's finally sinking into a level that would make a lot of sense for a potential swing buy. Double green, pullback. So that's a good looking setup. And in those situations, sometimes I'll play proxies for Bitcoin. We know that popular ones would be ones like MARA, right? I know a lot of folks have been asking about coin. So in terms of, Bitcoin being in a uptrend, I don't want to short MARA. I don't want to even short something like Riot, although I haven't really been looking at Riot. I want to look to see what names are in sync. Riot's not in sync. Whoosh, I can dismiss that. Mara is in sync. Coin is in sync. In sync with what? BTC USD. So if they're in sync, then we will stick to the long side and we'll buy the dip. And that's setting up pretty darn nicely right now. So BTC coming back down to the wave. I'll look for MARA possibly to do the same thing. We can look for coin to possibly do the same thing. But when Bitcoin has finished pulling back, I'm expecting Bitcoin to bounce out of the wave, continue higher, and take these two names, MARA and COIN, with it. So, and by the way, structure dictates strategy. I can't short it. I'm not allowed. There might be a short there. Sure, but I can't short it. Simply not allowed. Let structure dictate strategy. It keeps you long in MARA, keeps you long in COIN, and it keeps you long in Bitcoin as well, right? So that's where the conversation sort of started. You know, what is a JT multi telling me? JT multi is saying, hey, wait for a pullback, Rog, and then buy that dip. All right. So with that in mind, thank you as always for being a part of our charts and coffee show. Um, as always, when you see we have posted the link for the show on YouTube, get your questions in good and early, and I just go right down the line on these questions. So thanks as always, and I will see you tomorrow, same time, same station. Be good to each other.